Hello, traders. This is addzeros, and I want to do a recap today. I traded BNTX, DKNG, and the Twitter, and I also was very green. And but later on in the afternoon, I traded Beton, which was a negative or red trade. So let me walk you through BNTX, which is a very important lesson I wanted to teach you that when is the right time to short extended stock. And if you look at the daily of the BNTX, you will see that it was really gapping up and moving slowly. And if you heard my the pre-market show, what I was telling everybody that people love to buy over the 200, so it might be difficult for to short underneath of a 200 because it might gonna pull back. And that was I wanted to explain to you that why did I short. So if you look at it on the pre-market, there was no good volume, but it was consolidating between the 200 to 202 range. And this is the first minute candle. It moved back up. And if you look at the 9:30 first minute candle, it makes a bull flag, moved up, and then the last next 4 minutes is consolidated over the 207 range. So at this point, I will never go short because this is very strong stock, holding the VWAP, moving up very high, and holding the high of the day. So it's not at all the short stock. But then what I noticed here that it pushed back down, consolidated, made a bear flag. Let me show you the now 5 minutes as well, so you will see what I'm trying to see. But essentially, this was a 1 minute candle because 5 minute you won't find any a nice formation. So you look at it, it makes a bear flag, 1 minute candle, consolidated here. I didn't go short even now because I was not really sure because those who are extended stocks, those who are upward by 11% like this, they can easily have a false bear flag over the VPAP and gonna squeeze you. So never ever go short on this. Then it moved back. I was waiting for it. I have no intention to go short. Move back up, move back, and now in this, see if you here look at it closely, it rejected the VWAP, and there's a crossover moving averages. I mean, the moving average is now coming 50 and the 20 moving up and 9 is going up and the 20 coming down. So is the bearish uh, moving average. If you see, this arrow also shows that there is a crossover and the trend is likely changed. The higher longer term moving averages are coming on the bottom if you look at this pink one. And but essentially I didn't take the moving average trade, but what I'm trying to show here is it has a bear flag, came down, try to move back up, rejected the VWAP. The moment it rejected the VWAP, I basically shot it at 203 with a stop loss of 204, $1 stop loss. The moment it flushed down here, I took my first partial, and then as it move along in each candle, I basically uh, partial it, and I think I mostly stop out or took my all the partials around 1998. So I didn't wait to end this flush, and I was not expecting it to go further down, but anyway, it went down. And look at this. So it's very hard for to stock like this to go short, which are really strong. So you need to see the right formation. Some people are intuitive, they can go short by guessing the top of the day or formation like this. But for me, if I wanted to short any extended stocks, I wanted to see under the VWAP. That is the way I wanted to trade this strong extended stocks. Next one, I had Twitter. So let me show you the Twitter. Twitter was a good trade, but I was not patient enough for this trade because on the Friday it was just going up and down. So I was not really uh, happy about the way it moves. But I had a right pattern, so I wanted to go short on this, but I should have waited a little longer and I could have been rewarded. But if you look at it, it was very small candles moving very slowly. So it's hard for us to, as a momentum trader, to wait for this kind of a momentum. So now if you look at it, what happened here is a bear flag momentum. First minute candle down from green to red, start consolidating. I basically went short underneath of when this candle uh, this candle broke 54.90. I basically short 54.90 and my stop loss was the over this bear flag consolidation, which is 55.10. I came down here, I took my partial here, remaining partial here, and it moved back up and I stopped out here on this candle. I wish I would have not stopped out because once I took the two partials, I put the stop loss at the 55.01. If I have given the same room what I wanted to give it to is a 55.10 or 11, I would have been not stopped out and I would have ride this as well. But it's difficult stock. If you look at the stock, candles are moving up and down, and to trade this kind of a stock which is slowly coming down is hard because you need a lot of patience. And in the morning time, our buying power is important, and we can't just keep our buying power on one particular stock. The next trade I have traded on the DKNG. DKNG was a good trade, but I once it failed the VWAP, I basically stopped out. But then after I took it, it ran so well. So let me show you. So it was gapped up. It sold off heavily in the first 15 minutes. The moment it's making a bull flag, it went up, touched the 57, came back this red candle. The moment the next candle, this third candle, making a flag, breaking the flag and touching this pre-market previous day close couple of times, testing it, I went long here on the 55.01. I took my first partial because I have a 30-cent stop loss. I basically took my first partial on 57.30 because that was what I was expecting. It has a VWAP. I was not expecting to go further to that. It touched it one time, two time. I took first partial, second partial, and the moment it came back and touched the 57, which was my entry, I stopped out. And once I stopped out, it's basically pulled back to 56.80 and moved back all the way here. So if again here, if I given a little bit more room and kept it with the same stop loss what I had initially, I would have run. But I used to do the same thing in the February. I give the room, but the April, February, March, April was really hard. Stocks are quickly move against you, but doesn't go in your favor very quickly. So what I realized that I don't want to give room. So what I made the rule is that the moment I take the partial, I will put the stop loss at my break even, and that worked out well for me in the April. I want to see if the market continues to give this big moves in the April in this month in the May, then I will go back to continuation with to stick with my original stop loss, rather than going into the break even. But let's see how the market moves in the next few days, and then I can decide whether how we want to keep it. And the Piton uh, was why I like it because there's an earning play, and usually the earning plays sometimes you see the momentum in the last few minutes of last hour of the day. You see a big momentum because people love to buy when the earnings of the stock due within that week. So when it touched the 96.10, I basically went long here. If you look at it, I will show you here. Around 2 o'clock is making a bull flag here, and there's the previous resistance on the 95.90. The moment it broke this, I went long on the 96 96 96.10. That was my entry, 96.10. Move up sharply 50 cents because my risk was almost 60 cents. I didn't took the partial here. I was waiting for it, and then finally, I stopped out on 55.80 before the close, 55.89, 79. Here I've closed out, so I took a loss of 35 cents, but I was in small share size, so that's fine. That was my day. Hope you guys also have a wonderful day. Hope you liked it and learned something. Please, if you've enjoyed and learned from this video, if I've earned it, please subscribe to my channel and hit the thumbs up button. That way, you know, hit the bell button, so that's way you're gonna get all the new videos immediately, and you will able to learn how to do a day trading for a living.